Okay, good day, and today we are having a discussion with Deji Olowe on open banking development in Africa. Deji will introduce himself shortly. I am Adesoji Solanke, and I lead Renaissance Capital's frontier and Africa-focused banks and fintech equity research and venture investing teams. I'll come over to you now, Deji, but let me ask you my very first question so we can get into the conversation over the next hour. Can you tell us a bit about your career journey to date and how you've come to be so fascinated by open banking? It would also be worthwhile to touch on what your open banking journey has been like so far.
Thanks so much, Sojis. Good to meet you again. My name is Adedeji, and I've been in finance, banking, and tech for like over 2 decades. Background-wise, I have 2 degrees in engineering, one in electrical, even though I never spent a day fixing any wire, so don't count on me for that. And then the other in mechanical as well, and I can't fix my car. But quite interestingly, those engineering background kind of shaped my career over the years. Started my banking career with UBA, then previously Standard Trust, and then I spent about 4 years in Access Bank, which was quite interesting. I joined the Access Bank team when the duo of Igudi and Albert bought over Access Bank. So I was part of the transformational team that did up to the merger with 2 other banks. And then I spent a few times in FCMB, where I transitioned from technology, which was mostly what I did in Access Bank, into finance, and that took me also to UBA as well, which we did a lot of amazing stuff. But in UBA, I now transitioned from technology and finance into digital payment because I just love out using technology and solutions to solve problems at scale. And at that moment, when I took over that portfolio, I think UBA had just about 1.8 million cards, and I was responsible for cards across the whole UBA Pan-African network of 19 banks. And then in 2 years' time, we moved that to almost 4 million cards, and we made a lot of money as well. And subsequently joined a number of colleagues to go and be the transformational team at Fidelity Bank and transforming Fidelity Bank to, even though it was a tier 2 bank, to a front runner in technology. We are probably the second bank to launch USSD. We are the very first bank in Nigeria to allow, if you are getting on online banking, to have to do it by yourself. It was a rarity at that time. I remember pushing a lot of my colleagues to say this is safe to do. But one thing that shaped me has been my engineering background, because in engineering, everything is based on standards. So if you want to buy petrol for your car, there's a standard for petrol, there's a standard for the battery, for the tires. And what standards do really is like an unspoken language. Standard is the unsung hero of improvement, of innovation. And I noticed very well that the reason why Nigerian banks, even though late to the game, were able to successfully transform themselves into the fintech powerhouse was like, globally, there is a kind of standard for cards. You know, if I took my Nigerian bank card and I went to Kuala Lumpur, the ATM is just going to work. The POS is going to work. There is a standard that connect banks that never heard of each other. And I was thinking to myself, like, okay, in the fintech space, so we started seeing emergence of big players like Paystar, Flutterwave. But because I advise a number of them, I see the challenge in integrating with banks. So I'm a Paystack. I'm talking to a bank, and I said, okay, you know what? I need this API to do X. They give me the API, and I go to another bank that to do the same thing, and it's a totally different API. It's like it's like you get into a car, and in one place they pour water into the car, which would have been good for us in Nigeria anyway, and in another place they put petrol. It just doesn't make sense. And we thought, look, open banking, which was just starting in the UK at that time, it's more about speaking the same language. Right? What if we all spoke the same language? Would the world have been a better place? And that's how open banking started. So I didn't start it alone. I called a bunch of my friends, some in banking, some in Big Four, especially the three, KPMG, PwC, and EY. They all came, and then we all said, you know what, let's do open banking in Nigeria, and let's standardize. And we started that in June 2017. Quite difficult, actually. But we know that every standard globally is always a journey, right? And then we'll be on that journey so far. It's quite interesting. So basically, by and large, if you look at my post-banking experience, I've now moved from just doing banking technology, digital banking, My day job is I spend it doing technology investment, building ventures within the coronation ecosystem. Of course, my night job is I'm driving open banking with everybody, and I'm very big on consumer credit as well.
Okay, so that's good. You've certainly you've done quite a lot. So you've done banking, you've done technology. Now you're doing a bit of investing while still being quite actively involved in how the ecosystem evolves. So which is why I typically like talking to you, because you've seen quite a lot of things about how the financial services ecosystem has evolved. But so today's conversation is really around open banking. So as you know, following the implementation of PSD2 regulation in Europe, open banking has become a buzzword globally and increasingly in Africa. Open banking players on the continent, for example, have raised about $50 million so far, with 80% of that being raised in 2021 alone. And we expect that to more than double over the next 2 years. But first of all, can you tell us what exactly open banking is and what isn't open banking?
Okay, good. So we need to have a joke in my open banking circuit, global network of open banking players, right? And we tell ourselves, if you ask 100 of us what open banking is, we'll probably get about 120 definitions. But jokes apart, I would tell what open banking is. And it's not really as glamorous as it sounds. Open banking basically is standardization of APIs within certain jurisdiction of financial services, mostly banking. So open banking is not API banking. So if I were a bank and I open my APIs to fintech to easily connect to me, that is not open banking. That is just API banking. For it to be open banking, a jurisdiction, whether it's Europe as you have PSD2, or is Nigeria as you have normal pure play open banking, or in Australia or in Canada, right? The regulator there to say this type of transactions, this type of behaviors must be done this way. And that is when it becomes open banking. So the open in open banking is not the openness to connect. It is more like the openness of standard. It's non-proprietary, it is defined, and it's something you must, if you want to do it, you must follow that standard. If you want to do cards today, you must use the ISO standard. If you want to manufacture cars, your tires must be certain standard size. You can't have some kind of fancy looking tires and slap it on your car. Even all the transportation ministries will never approve that for you. So open banking is about standardization. Now, when banks open APIs, that's just pure API banking. When you have API providers like the like of Tink in Europe, Plaid, Mono, Okra, Doja, that is just API business. That's not open banking.
Okay, that's a good context. But let me take the conversation a little bit further, because you are speaking to us from Nigeria, and that's where you've been a driving force for the movement in open banking so far. So for Nigeria's open banking journey, where exactly are we at today? What's in place, what is missing, and what are some of the hurdles that we still need to cross?
Okay, thank you. So open banking normally sits on a number of pillars. So open banking regime, anywhere, you have the pillar for regulation, you have the pillar for standard, you have the pillar for data privacy. So before we talked about Nigeria, let's talk about Europe. So if you look at Europe, the regulation is the PSD2, right? And the standard are the different either national or cross-border standard being set up. But in the UK, it's called the open banking. That's what they call it. And then you have the data privacy rules as well. In the Europe, you have what they call the GDPR. It underpins everything you do. Nobody cares whether it's open banking or not. To step into Nigeria as well, we have this pillars as well. When it comes to open banking, the first thing you must put in place is the regulation. And the good thing is that the regulation came out February 7th of this year by the CBN. Now, that's looking at about 3.5 years of intense advocacy with the central bank. Trust me, I don't want to do that again. Extremely grueling. But looking at it is what it's doing for everybody. The next thing is the standard. So Open Banking Nigeria has previously drafted some standard to be able to, ginger everybody, because we knew that the regulations will come out. So by doing draft standards, it helped everybody to start. So the CBN actually, after the regulation, sometimes around May, created an industry committee broken down into 5 subcommittees that look into these standards. And that standard has been done, is being reviewed by the central bank. we are expecting it to come out in the end. Now, the third pillar, which will be data privacy. If you notice, NITDA, a Nigerian government agency, has previously created the Nigerian NDPR as Act in 2019 that underpins what you can do and cannot do with customers of anybody's data, not just customer, anybody's data. So those three pillars are in place. One is just being, let me say, it's being plastered and it's going to be painted and released to the world. And then we can say implementation will start. I see implementation starting from early next year. We know the CBN, when it comes to innovation and technology, CBN can be quite aggressive, much more than most regulators are aware of. So I expect, now, this is not, I'm not speaking for CBN, but I expect that the central bank, when they blow the whistle for implementation, might give banks like about 6 months, maybe maximum of 9 months for them to get things done. Trust me, maybe there may be 1 or 2 delays. So we can see open banking become fully operational in Nigeria from like first quarter of 2023.
But what exactly is, I'm just trying to bring it a bit more practical now. What exactly is operational today? You know, I understand the pillars are in place, but there's also been some players that have raised money and are doing certain things. So what exactly are they able to do under the current environment? Okay.
Currently, no single person, right? No matter, look, it looks nice when we slap open banking on funding announcement and the rest of them. Nobody's doing open banking. Absolutely no one. Right. Take that from me. Now, what do you have in place? So we have a number of API providers in place. OnePipe, Mono, Okra, Doja, and maybe my bank statement. Now, basically, all of them are proprietary connections to banks. And all of them also release proprietary APIs to their customers. No two of them have the same API in the same way. So basically, there is no openness at all in their APIs. All of them are providing API. And for some have sanctioned, or when I put it this way, some have kind of a contract with the banks and they are connected. You're looking at maybe my bank statement, you're looking at maybe OnePipe. But for the others, are quite innovative. You're looking at Okra and Mono. They have these innovative ways of customers being able to use their internet banking and mobile banking credentials to connect. Now, this is how Think works in Europe, just recently bought by Visa, and Plaid works in the US as well.
Okay. So what they're doing now is based on proprietary connections to banks. Then what should happen next year in practicality?
Okay, so when CBN releases open banking, first and foremost, what I know, and it can be quite challenging, is that the open banking that is coming is, like I said, it's just another channel. The existing regulations will be in place. So there's high likelihood that most of these guys may still not be able to use open banking. Why? Because for you to use open banking, CBN rules are clear. You have to be a licensed PSSP. The list of all licensed PSSP are on the CBN website. I understand a number of people have placed their license request with the central bank. There's quite a number of backlog. Maybe by then, CBN will have released and approved a number of people. But if you are not a licensed PSSP, like maybe you are a Paystack, you are a system spec, you are IntoSwitch, you will not be able to use open banking from next year when that becomes operational. Now, on the flip side, what I see will happen is that a lot of these guys are quite innovative, like super smart. So I see opportunities for them helping the bank to be the one to achieve their open banking objective. So if I were a OnePipe, for example, I could actually come to a bank, which is what they're doing right now, and say, you know what, I'm not licensed, but I'm going to be your technology provider. I will help you provide the technology and I will help you manage this product and this service. Of course, then we can reach into commercial agreement, what comes to me when successful API calls are made. That's what I see in place. But as it is right now, nobody's doing open banking, and none of them can do open banking directly unless they're licensed by the central bank to be a payment service provider. Okay.
And when you say they don't do open banking, it's a function of the fact that the standards are all different. Would that be the main point you're trying to make here?
Okay, so first, their API system and processes are proprietary to each one. And secondly, they are not actually subscribed to any standard. So look at it this way. If we had a standard in Nigeria, even if it's not sanctioned by the CBN, as long as everybody agrees that this is how to do it, it will have been open banking. But that's always difficult to achieve without a regulation, because open banking is always very before people see the benefit, it's always like, it's like asking kids to eat their veg. It's always very difficult until they now become vegans down the line. But in the beginning, it's always a very difficult journey. That's the same thing as well.
Okay. So in UK and Europe, the standards are streamlined. Would that be the case?
Okay, so in the UK, there's only one standard. So the UK took a very high school principal approach. My way or the highway. You must do this. So that happened in the UK. And trust me, if you ask everybody, the journey at the beginning was extremely rocky. Banks didn't find it funny, because even the UK government made sure that the banks, especially the top 9 banks, were the ones that paid. They paid for most of the heavy lifting. So you are being forced to open up, and you are being forced to pay for it. They made all sorts of noises, but in the end, the government actually did. And interestingly, in the UK, open banking is actually not led by the any of the financial regulators, not the PRA or the BOE. No, it was actually done by the CMA, the Competition and Market Authority. They brought in open banking to rein in the bullying top 9 banks, sort of, right? In Europe, there's a regulation, PSD2, which is also the same regulation that covers UK. But in Europe, there are 10 competing standards. So it's some sort of chaos. So that's why UK having one single standard, that's why they're leading. If Europe has come together to use one single standard, it would have been totally different. And open banking is entirely different from SEPA. So SEPA is like the faster payment network in Europe. It's totally different because SEPA moves money around and it's not doing things like I want to get customer statement or whatever. Yeah.
Okay. All right. That was very helpful. Let me come to something else. We recently did some work looking at Mono following its 50 million Series A raise. And one thing we've been pondering in-house is the winner take all, or should I say oligopolistic tendencies of open banking, in that the bigger you are, the more valuable you are to the ecosystem, the better the quality of your platform and insights, and the more other clients want to use you. Do you agree with this line of thinking or not? And what are your views on barriers to entry into open banking?
Okay, so when it comes to the fund raised by Mono and wherever, I would say these guys have done an amazing job. I'm talking of Mono, Okra, OnePipe, and to a smaller extent, Doja and my bank statement. But look, data is a commodity. Data is a commodity with an extremely short shelf life. So it's going to be extremely difficult for anybody to actually be monopolistic in a way. Can you pause for a moment, please?
Sure.
Working from home involves taking deliveries, which apologies for that. No so I was talking about the monopolistic approach. Data is a commodity with very short shelf life, right? There's no identity. So you have your email, maybe your Gmail, so you have every incentive to keep it, right? You've created a number of followers on Instagram, maybe you have every incentive to keep it. But if I were a player, right, and I'm pulling data from a Mono, and then tomorrow comes around and I find a better deal with, say, Doja or somebody else, I'm going to switch because they are just pipes. Today, where you are, I don't think you are, what do you call it? How would I describe it? You are not, for example, kind of, I don't think you're enamored with your internet service provider. If somebody has provided a better service, you switch. I don't know what is carrying your internet traffic, and I don't care. So you make those decisions based on quality, on affordability, on customer support. Brand equity is next to nothing. So to be very frank, it's going to be an extremely bloody space to be in. Anybody can be knocked out. So if I were a payment service provider today and I'm providing API service, and somebody comes in tomorrow, it's easy for me to lose my entire business in a short while because there's no. So it's going to be a race. But this is interesting. You know why? It's interesting because competition forces people to be more innovative. Right now, the cost of data is still quite expensive. It's still beyond the reach of most players, and it's still beyond the reach of using it for a large retail space. So if I'm doing loan, let's say because the biggest users today are lenders, right? So let's say I'm trying to underwrite a loan of 10,000 naira, that would be about maybe $20. Why would I spend almost maybe $1 underwriting that loan when I'm not even on data, when I'm not even sure if the loan is going to come back, when I'm looking at my cost of funds, I'm looking at cost of operations, I'm looking at the margin I want to maintain. So by having open banking come in or having more people in this space, the competition is going to be keen. And for those of us that are providers, we love it. Like, guys, duel it to death. When you're done, let us know. So that's what I don't see anybody have any competitive advantage, frankly, because I don't at all. But I could be wrong.
Okay. And your view is that in terms of barriers to entry, it's quite easy to get involved, at least from the Nigerian angle. And do you think next year, based on CBN regulations, are there what are sort of the barriers to entry into open banking for anyone who is looking to be an open banking pipe, for example?
Okay, so here's the thing. When CBN's open banking comes out, based on the standard we've written, because I'm actively involved in the process end to end, from the regulation down to the standard being developed, the quality of data that is going to come from the proper open banking will be significantly superior than to what anybody can provide to you right now. Because whatever we have right now is still mostly apps, right? It's still mostly screen scraping, innovative connectivity to the bank endpoints and stuff. So when this one is going to be superior, and when it's superior, it's going to change how things work. So I see the current players who've raised money will have to find a way to being able to pull those data either through other providers, because if they don't do that, then the established players that are PSSP, like the likes of IntoSwitch, Paystack, whatever, if they get into that game, they provide a more superior data, and then these guys will find it quite more challenging. But I see some ways, when I see the innovation and the speed of execution and the quality of execution from the likes of Mono and Cochrane, I suspect that they will probably end up getting a license, and then they'll get into that space.
Okay. So basically, if I'm hearing you correctly, it's critical for them to, from next year, it's important for them to have this PSSP license. Otherwise, they'll need to plug into an entity without license for them to be able to execute open banking properly.
Absolutely.
Okay.
It should be sacrosanct for them to do.
Yeah. And if they don't have the license if they don't have the license next year, they'll need to connect to the third party. Basically.
Yeah, they have to connect to a third party. Now, it depends on the quality of the third party as well. If they connect to a good player, then they are fine. Of course, They always have to look. They always have this fear that this player can start going directly to their end customers and knock them out. Because look, if the player can give them a margin, the player can give up that margin to be able to take the customer directly.
Yeah, because that's what I was going to say. Because what's the risk of, for example, let's say Paystack saying they want to build out their own open banking interface, right, or product?
So I expect every licensed player will do this, because let's be very frank, it's not about Paystack alone. It's about almost every PSSP. Payments today is basically a commodity as well. In fact, everybody from Remitter to IntoSwitch, everybody is competing based on pricing, right? So pricing, we've all reached rock bottom. Now, the next layer of competition is now quality of service, stability, and the rest of it. So the market may be growing, but the margin that people used to have kind of gone. And so everybody is looking for where the margin is still kind of thick enough to support the aspiration. So I expect that once open banking comes in, practically every licensed player wants to get into that space. I expect a few leaders to come around, because if your quality of service when you're doing payment hasn't been great, I don't think you are going to magically develop quality of service, right? So marginal players with poor service may still not be able to muzzle their way. So I still expect the top leaders in payments today, right, to still be the leaders that will emerge in that open banking space as well.
Yeah. Okay. So I think what I would like to know next is, assuming you are an investor in, one of the existing open banking players, open banking, let me put it that way, in Nigeria, how would you think about value creation over time? How do you win, and what sort of KPIs would be important to track, particularly given the evolving landscape, as you rightly discussed?
Okay. Thank you. So the question I'm going to ask is, look, companies don't exist in isolation. They are all means to an end. So let's take payments, for example. The rise of Flutterwave Paystack was to help fill a gap that existing players couldn't fill, even though they had the capabilities. People, companies simply want to do business. Prior to the emergence of these players, right, even including guys like CRB, like TeamApt, we had only about 4,000 merchants exist online that can accept cards. But since these new players came around in the last 4 or 5 years, those numbers have rocketed to over 200,000. Then you ask yourself, where did this business come from? Look, it's not like maybe some economic miracle has happened in Nigeria. Basically, by removing those frictions, people now dream and they now know they can do a whole lot of things. Same thing exists for data. Today, data in Nigeria at this time is mostly powering things like credit. But beyond credit, is going to power things like personal financial management. Look, people will say Nigerians don't save, but when you look at what PiggyVest and Carriers are doing, and to a smaller extent, like agro partnership, Thrive Agri, then you know that, look, this is wrong. If you remove the friction, something will happen. Now, these are the players that need data. So, for example, today, if with open banking, if I gave open banking to PiggyVest, PiggyVest can help me manage my bank balances. And the average Nigerian has 3 accounts, right? So a PiggyVest can say, okay, you know what, I will help you at the end of the day, I will zeroize your bank account for you and start putting your money in Piggy. You can be quite amazed how much you can put together if I run everything down to 1,000 every single day. You can see very innovative bank like maybe like Kuda, like Sparkle saying, when you sign up with us, you'll be able to see all your bank accounts in one single view. We have that in Europe at this time. There's nothing stopping us from doing that in Nigeria. By having that single view, they could actually buy your eyeballs. Oh, by the way, if you give them the right to be able to score through your transactions, they can start doing some AI stuff to start telling you, maybe you need to buy this, maybe you need to buy that. Now, that is on one side. On a global level, I know this hasn't happened in Europe, but I know this is the kind of thing that Facebook and Google and the rest can do. You get to a level where all these global players can start saying, we're pulling your data together, and we can start offering some sort of, well, subject to consent, some sort of incentive to say, look, you know what, I've checked the bank balances on transactions of 500,000 of my customers, and I see they always go to this place. You know what? Maybe it's time I walk to that place and say, guys, my customers come around there, or they go to something similar. Let me aggregate their eyeballs and offer a better deal for them. And then everything just, so those are the opportunities that exist. Now, if you're looking at about 65 million unique BVNs that have bank accounts today, you can have an idea of opportunity that exists. Let's even leave financial inclusion aside. 65 million is a lot. That's more than the population, more than half of any country in the world when you rank them. So quite a lot can happen when this thing comes to play.
Yeah, I think you've discussed some exciting potential use cases of open banking. And I was just wondering, beyond credit or identity verification, in which of these use cases are you most excited about? Which are the ones you think are, should I say, have more tangibility around the execution, particularly in a Nigeria or broader African context? It'd be good to know what you think about that. Other use cases for open banking, basically.
Okay, so financial inclusion is very critical. So, and I'll tell you, so take Nigeria and most other African countries. So traditional banks, apologies to them, they don't think in agile ways. And it's no problem. Look, my kids also call me grandpa, I'm fine. So when banks think of extending their services to last mile, they think of building branches. So when the bank counters sit down and calculate how much it costs to go to Kaura Namoda, for example, they're scared of the numbers they're saying now. So putting up a branch maybe costs you about 50 million. And how many people in Kaura Namoda? No, we can't make this kind of money back in gazillion years. So we are not doing. By the way, the way every country is. You have a few concentration in the large urban areas, and then you have every other people spread across peri-urban and rural areas. Now, with financial inclusion, you've seen the play from people like MTN, from Capricorn Digital, from TeamApp, from the likes of them, going out doing super agency. Unfortunately, as these guys are spreading out and growing, they say that 40 million Nigerians still don't have bank accounts. That space is still there. So they can't open account for them because they are not banks. CBN does not allow super agents to open account. You can only open account with banks. But then integrating with banks to do all these things takes so much rigmarole. It's a lot of problem. With open banking, this problem disappears because this fintech are nimble. So I expect that just like MTN, Airtel did when they came to Nigeria and they connected the whole of Nigeria with telephony, cheap and extremely cost effective, open banking will allow super agent network to be able to bring the other 40 million adults in Nigeria that don't have financial services to come into play. Now, remember, we could have 40 million people right now because these are the adults. But about half of Nigerians were born in the last 20 years. Almost same thing in Africa as well. So we see that the problem of financial inclusion will continue to kind of pile up even over the years as younger generation become adults as well without having access to financial inclusion. So I see open banking helping fintechs to do this. And beyond Nigeria, East Africa, West Africa, Central Africa, where financial inclusion is very poor, these guys will bridge the gap and they will bring financial services to everybody. Those are the things that actually excite me more about open banking beyond the interesting payment space.
Yeah, okay. I was actually going to go next to just thinking beyond Nigeria, right? Because Nigeria seems to be leading the charge on many tech fronts, including open banking. But which other African markets do you expect to be quicker to adopt open banking and why? And what sort of traction are you seeing in any of these other markets so far?
Okay, so South Africa is making the right noises, but they still have a long way to go because talking about it, based on my experience, it doesn't become open banking. The work has to be done. So I still see them having like about 2 or 3 years ahead of them. But I believe Nigeria going live and seeing transaction will catalyze the rest of Africa. Rwanda has made appreciable progress. I remember we were all in London together like about 2 years ago to talk to CMA. So I see that happening as well. Kenya may also get there on time, but I don't see the other joining in the next 2 to 3 years at the least because it's not there yet. So I guess Nigeria will lead and be the poster child, and then these other countries will join, and then maybe maybe in 10 years, every other country in Africa will have been fully open banking compliant.
Okay. I find your response fascinating because maybe let me ask you this question. Why does Nigeria seem to be leading the charge on many tech, or should I say fintech, innovation efforts relative to some other African countries? What do you think is behind this?
Okay, so it's actually quite interesting. So Nigeria leads in fintech, but Nigeria doesn't lead on everything. And so, for example, our insurance is still significantly challenged. Our capital market is going to see transformation. The new leadership at SEC they are simply amazing. They are bringing up some interesting things will come into play, but we are not there yet. Our pension space, I guess the innovation stopped after a while, so we haven't taken it further. So in reality, you haven't seen that. What has been fascinating about banking is how the Nigerian bankers actually create. So right from the beginning, the Nigerian banking space has always been collaboratively competitive. So the banks actually compete with each other. After all, the money I have in bank A is not sitting in bank B. But banks come together in Nigeria, they have committee for literally everything, right? And they have strong rules that they all abide by, as much as anti-demarketing. So you can't even, as one bank, you can't advertise your product in such a way that makes the other bank to look bad. Like they are that cohesive, right? And that fostered innovation. And banks came together to create NIPS. They came together to create InterSwitch, came together to create UPSL. They have significant investment in eTransact. They have investment even in CSCS. They created BVN at a time when Nigerian identity was a mess. They put $60 million together. And I don't think $60 million is more money anywhere in the world, of course, except Jeff Bezos or Elon Musk, right? So they put all these things together to be able to sort their own problem. They created SANEF. So this kind of collaboration is what has grown the fintech space. And unfortunately, I'm sorry, that type of innovation and collaboration doesn't exist in any other industry. Case in point, when everybody was supposed to do SIM registration, it would have been impossible for Nigerian banks to have done SIM registration if they were banks, telcos, individually. They would have come together with even NCC and say, let's do this thing together, central database, share our costs, and we'll all be fine. It would have been significantly cheaper, and these issues of terrorism, we don't know who owns what number, wouldn't have been a case. That kind of collaboration doesn't exist. Within the fintech space, they don't collaborate as well. Lenders today get defrauded by different crony debtors, but they don't share information with each other. So that is why only the what I would like to call it, the banking space is doing well. In the capital market space, the good thing is that SEC right now, they are now quick to their feet. The DG is super amazing guy, and they are creating regulation and talking to what do you call it, the players to create that space. And I will tell you, watch out for the SEC space. Is I would say the banking space is going to find a worthy contender in a couple of years.
That's from the tech space, you said?
From the capital market space.
Capital market space. Okay, interesting. And maybe just a final question on open banking before I just do some quick fire questions. What are some of the risks associated with adopting open banking, both to builders of the infrastructure, whether it's things like concerns around things like data hacks, as well as risks to users like consumers or banks? And to what extent do you think these risks or concerns have impeded the growth or adoption of open banking in Africa?
Okay, so I would say none of the risks have actually impeded the growth. People are just not moved, but the risks are big and scary. So when you talk about data hacks, that is a big problem coming up. We need to find a way to make sure it doesn't happen. And then we also need to look at in terms of consent, because open banking is extremely powerful. As in, I could give you access to come to my bank account and pull my information every day for gazillion years. If I don't know that I could control how you have access to this, a lot of people are not really that sophisticated to know the power that they're going to add. Everybody just going to think I'm adding it like the way you had a Facebook something. Because with open banking, okay, let me put it this way. When you use what Mona and the rest are doing, you have to use your username and password, and then you have to sometimes reauthorize. If the user changes his password, that connection fails. In open banking, it's going to work differently. It's like when you add it, you get a token, and that token is valid even when the underlying password and the rest are changed. So it means that giving access, right, is going to be a big problem. So that consent is going to be a challenge. Customer understanding what they're getting involved into is going to be a challenge, because open banking is super sophisticated. Even in the UK, it is confusing for a lot of even educated people. Now, when you come to a mouse space where you have a lot of people getting into payment and for the first time, they may not know what they are getting involved with. And also, customers sometimes may also get involved with something rightly, at least technical consent given, but they don't know it, and then you're going to see customer yelling at the banks, oh, they stole my money, and then when the bank tells them you're the one that did it, they say, no, bank, you're lying. It's not possible. I couldn't have done that. Now, those are the challenges we should be looking at. But I believe that, look, as we're doing this open banking, some of the things I'm doing with my other colleagues in this space is to make sure that when we're going out, customer advocacy has to be on point. Educating the customer, right, to know their rights, what they should do, what they should not do, is sacrosanct, because if we miss that, it's going to be very disastrous.
Okay, that sounds good. Let me ask you about another, really hot topic in Nigeria this week, which is eNaira. So, first of all, what's your view on this development in terms of implications for banks, non-interest revenues, as customer and merchant fees are zero? And how do you think banks respond to adoption of eNaira given this risk?
Okay, so what I know is every bank, about 33 banks, have integrated and implemented eNaira today. To be very frank, personally, I'm biased against crypto and cryptocurrency. So I would say that my opinions should be taken with a pinch of salt, because I ask myself, what problem is this thing solving? And I'm saying, okay, financial inclusion, it doesn't bring you in. Inflation is there, it doesn't solve it. And then banks doing transactions for free. Yeah, look, sometimes they can do it for the good of everybody. Like, they make a whole lot of money from other things as well. So maybe, but at a certain scale, people are going to come around and say, oh, I don't want to do this anymore. So the jury is still out. eNaira will go. As usual, Nigeria is always leading when it comes to payment technology. I'm quite surprised that CBN is doing this as well. And not surprised in a bad way, surprised, like I'm impressed. Like, you know what, sometimes some of these are experiment at a national scale. Let's see how it goes. If it goes well, we may be leaders in this kind of space. If it doesn't go well, we just say, okay, you know what? Well, guys, that didn't work. Let's move on to the next thing.
Yeah. Okay. But it was worth trying.
If you don't try it, you don't know.
You never know.
Yeah, absolutely.
Okay. And also, just considering your background in banking, it'd be good to get your overall view on the outlook for banking in Nigeria over the medium term. What are some of the things that you think about nowadays?
So one of the interesting things that have been happening of recent has been, you know, banks are now okay. So people are seeing valuation of fintech, right? Everybody will say it's going to pop. It hasn't popped yet. I see a few corrections ahead, but I feel that by and large is in the right direction because look, value is changing. Look, you look at Tesla today and say it's over $1 trillion, it's bigger than all the other. And then you say, why? Because it represents the future. And that's the truth. Probably in 20 years' time, people are going to say, you guys used to have internal combustion engine that had like 1,000 parts. Oh my. But the truth is, this is where we are. That's what investors are paying. So when people look at fintechs with very large outside valuation, they are looking at the future and not the past. Now, this is becoming a burden. So at first, it was some sort of don't mind them, this thing doesn't make sense. And it's becoming like a lot of board members and shareholders in banks are also now getting investment in these fintechs. And they're asking themselves, look, I'm a shareholder. I care mostly about returns. Yeah, it's nice to be on the board of this or that. But look at my returns, right? This is a fintech, smaller, nimble, stratospheric returns. Yeah, a few debts here and there, but I can live with that portfolio. And this is the bank. So I see that it's going to get increasingly difficult, not just Nigerian bank, but global banks to actually kind of explain away their returns and valuation to their shareholders and the public in the years to come. And I think on this, it's not just Nigeria, it's going to be difficult. Just imagine you being on the board of BMW today. Look at all the beautiful cars you do, Mercedes-Benz, Daimler-Benz, and BMW market valuation of 65 billion, right?
Yeah.
You have factory everywhere. Then you look at Tesla, and then you're looking at a shareholder who is in both of them. And you're trying to say, no, we are letting. Look, at first, that story will be interesting. But if Tesla continue to grow at where they are, and then you also have all those other Chinese guys coming in, people like Rivian and the rest of it, it's going to be an uncomfortable conversation. So what I see happen in Nigeria is that the fintech will have stratospheric valuation. A time will come around when they also have to justify it. They may have cash to actually start encroaching into the traditional business. Some of them may even buy traditional business and apply their fast to the market, quality of execution to this system. I remember very well when I started my banking, I worked for Tony Illumina, I worked for Adedeji and Albert Wigwe. They used to call them cowboys. These guys were practically kids, and everybody said they weren't going to do anything. You know what they did? You know how this game changed. Probably this same way is going to happen as well. So I would say, look, unless I see a convergence in the future, right, maybe post midterm, and I actually see the current crop of traditional financial leadership being the losers.
Being what?
The losers.
Right. Okay.
Because ultimately, in the end, shareholders will start demanding returns because these shareholders, they are all investors. In 5 years' time, practically every senior, every smart investor will have that currently have equity or control in any traditional business. We also have in the fintech as well. I see them all pouring in, right? And then they will start asking questions about returns. Because look, you are an investment banker. Return is everything. Look, that 100% of a pile of building doesn't mean anything if I don't get returns. And they're going to ask into a tough questions. And the arguments that the traditional bankers and leadership today will be giving in those times will no longer be. Right now, it's kind of cute, little kids, they don't know governance, when market will correct. But in 5 years' time, it's going to be difficult to say the same thing.
Okay.
Okay. Yeah, that's what I think.
Okay. And what do you, just given your comment, what do you make of the evolution by some banks to holding companies, right, as a way of responding to this technological threats and risk of returns that you've highlighted?
I don't see it helping them. It's not going to help.
Okay. And
I will tell you the reason why. Because what makes the tech to be who they are is not the structure of the business. It's in the DNA. Look, it's either you've got the DNA or you don't have the DNA. That's the truth. Ability to think fast, to know what is important. Look, I've worked in big companies, right, all my life, and I've worked with a lot of small organizations. And you ask yourself, what's the difference? You look at the speed of decision making and the quality of decision making. Look, a lot of time we hide at big companies, we hide behind, these are things are done, we hide behind governance, we hide behind rules. But basically what we're just hiding from ourselves, like, look, we don't understand these things work. And instead of being comfortable with having how will I call it, contrary opinion and experimenting and seeing out. We don't. So this is what the other professors talk about, the innovations dilemma. You've been successful, but you are scared of leaving your comfort zone to try other things. So you are scared of trying the one thing that got you to where you are, right? So that's a challenge. So if you create holding company, but you still think like a traditional bank, you are still going to just create a traditional bank holding company. It doesn't solve your problem. It doesn't. It does. The market doesn't care. So I don't think it's going to solve any of their problems unless they think like true innovators.
Yeah. That sounds good. And for yourself, I mean, other than open banking and what you do with Trium, and you mentioned Coronation earlier on, what else are you busy with within the ecosystem overall?
So I'm actually keen. I'm deep into credit because I know, like, if you do basic economics and stuff, there is no country in the world that can grow without consumer credit, because basically, and consumer credit solves two problems. First and foremost, it takes money to those who need it, and in such a way that they can grow and grow the economy. It creates consumption, right? And when there's, look, when I have access to credit, right, and I able to consume stuff, I'm buying stuff from companies who employ people who pay taxes. That's one on one side. On the other side, that credit also now creates opportunity for those who have spare cash at this time to have alternative means of alternative channels for returns as well. Today, in Nigeria, for example, bank rates are so incredibly poor that you don't have any incentive to save. So people take to people like PiggyVest and the rest of them. And those ones are cramming into the money market space trying to get returns. Now, but the only challenge with credit is that, look, yes, theoretically credit looks interesting, but if you are not able to get your money back, if you are not able to underwrite cost effectively, if the cost of putting this thing up is so high, then there's a challenge. Those are some of the problems I'm trying to solve during my night job.
Yeah. Okay. Yeah. Okay. And any last words on what else excites you in the world of African fintech and what you're paying closer attention to nowadays?
So what excites me is I see that we're actually in a point of inflection. So especially when it comes to funding. So before now, most of the funding has been coming from international investors because they understand risk and they also want to tap into Africa. In fact, the understanding of risk is what is making them to come into Africa. You know what, let's put a few billion in Africa, let's see how it plays out. Now, I'm seeing a number of very good exits that is kind of validating the market. Now, even local investors are saying, whoa, maybe those guys are not stupid. So I see more cash will come in. I see correction will come in, but I see the market exploding because as the cash coming in, as more innovation is coming in, I see people removing friction in different spaces. So I think the next 5 years is going to be pretty amazing. I think if you are not in Africa at this time, you may actually be losing out. And you know what happened when MTN was coming to Nigeria at that time? Everybody felt they were stupid as well, even global players and the rest of them. We all know how the story ended. I think that's the same thing that is going to happen as far as technology investment in Africa is going to be over the next 5 years.
Okay, sounds good. Look, Deji, I enjoyed this conversation. You had a lot of bold calls on how the ecosystem plays out, so this was very useful. We hope to stay in touch. I mean, we see you every now and then, so hopefully we have you on another conversation in the near future. And for you watching, thank you very much for your time. Thank you very much. Bye, Deji.
Thanks so much, Saji. Goodbye.
Okay. All right. Bye. Bye.